Story all over again. Let's try Zoom, okay? I'm gonna close the Telegram call. 1 second. Hello, hello, hello. Hello, hello, hello.
Hello?
Yeah, better?
Yes, brother.
Sounds
I
good?
think yes, it sounds good to me. How about
Okay,
you?
sounds good. Okay, let's just get going. Hi, everyone. We just had a little bit of... Okay, let's not blame Zoom because they have a lot of security breach issues right now. So we have a little of a connectivity issue as far as the sound. So we still posted. We have a lot of great ideas. Let's just put the screen on. Let's see what we're going to go over. I'm going to go with trading view initially. I have Mahesh all the way from India and myself, José Ricaurte Jaén, directly from Dubrovnik. It's 3:38 p.m. in Croatia, and the markets just open. I'm just laughing loud. Like it's just I want to say it's unbelievable, but whatever you guys are looking at happening, it's impressive. Now, we're just gonna start with the US dollar versus the Canadian dollar. Quick overview on currencies. Mahesh will take the floor in a moment with everything that's happening. Quick idea of the power of data, the power of macro news, and everyone is looking at where the price is right now, sitting at 139.74. It's broken. Well, it broke down volume profile to the right. I've been talking about this. We talk about it. One of the most powerful tools that you can have in your arsenal in 2020, actually since 2019. I mean, Ross Gibbons, senior editor of the Insider Report, oh my God, the man talks so much about it. Great trades all the time. Just set yourself up with one of these. And this is Trading View. You can have a free package. I use the Pro package. It allows me to share with different members of my team, the War Room, and everything we use. Now, this is on the 15-minute chart. Quick note, 2 minutes before the release of the data, the Canadian data, that, by the way, was truly horrific, like bad. The currency was trading at 140.53, okay? And then look at this. This is what happens with the data. Look at the net change data employment on, I think we're recording. Let's just double check that. Yes, let's see. Yes, we're recording. Look at the data, Mahesh. It was funny. Net change employment minus 1,010.7K. Horrible. And still, the Canadian dollar is trading higher. Two fundamentals reason. Number one is obvious. The US dollar was worse. And as of this recording and the understanding that I want everyone on the YouTube channel, Market Traders Daily, is to understand that the dollar is vulnerable. It's dollar weakness across the board. Mahesh will talk about it. He will go over the US dollar index, and then he will have something else to share with every one of us. One of the trades as well, I will share the trades ideas that we had and the trades ideas that we just placed as soon as we have this information. Our clients, they're already in profit, break even. We cannot lose money. Okay, so the one thing I want to share with you is potentially what we're looking at the indexes. We're going to take a look using Trading View. Let's take a look first. S&P 500. What is the S&P 500 futures? I'm just laughing how these are unfolding. The current contract CME trading at 276. We can see this is the 15-minute chart. Let's move to the daily chart. Just keep this. Just move the bar. Mahesh, you can go ahead and be preparing your content. Take a look at this. This is about to break, and I wouldn't be surprised that today we see 28 40, 2,840 in the S&P 500. Look at the 15-minute chart. We have a strong support at 2667. We have the point of control, POC, red dot line all the way. There's a line of volume executed, and this volume will at least support all the action. Nevertheless, if you're looking for more confirmation, remember we had roadkill, bottom, started green. We have tick of volume coming from Hawkeye volume trader, volume package. So that's absolutely evidence that there's more to come. And I wouldn't be surprised that today, before the closing bell, we see 2,800 and then 2,840 for the S&P 500. Continuing with the Dow Jones. Let's see, where is that? How's that doing? The Dow Jones, this is a CFD. What is the futures contract? It's YM is the E-mini. What is the big contract? I can't remember the big contract for the Dow Jones. I will take the E-mini Dow. Let's see, it's $5 per contract. Let's take a look at the continuous contract. Little different story. See the push. We have a big push. Look at all the volume, Mahesh. You see that?
Yes.
Wow. Not a surprise. Easy. I will expect a pullback. Why not a pullback to 23, 29? This is in the very short term. And then in continuation, today can be the day that we see a break touchdown for the Dow Jones, at least looking at the E-mini, $5. I presume $5 per tick. Have to look into that. 24,000. And one of my favorites, I'm not going to go into the futures contract. I'm going to take a look at the ETF, Nasdaq, one of my trades. Look at that beautiful push. You see all the volume. Again, look at the sideways action. This is the action, sideways actions. We have pullback in the channel and breaking previous offer. There's the previous offer at 202 for the ETF, Nasdaq ETF that we trade. QQQ and playbook play, Mahesh. Also, look at this. Look at the bottom. Your favorite, roadkill.
Yes, that's right.
There you go, roadkill.
Amazing.
We have this bullish buy signal, and there you go. Now, how far can we go from this point? I will say that is the level. So we're talking about 5 to 1, the $6, and so $6 on this level will take us all the way to 209. So make no mistake, today we can be at this level, 210 for the ETF QQQ, which the underlying asset is Nasdaq. Mahesh, let's not make our audience wait. So I'm gonna just stop sharing, stop talking, and the floor is yours.
Okay, thank you so much. Let me just share my screen. So there we have it. We have the dollar index. So this is the daily chart that we're looking at here. And if you guys remember, we spoke about it a couple of days back. I think 2 days back, we spoke about it, that there is a doji witnessed on the US dollar index, and the corresponding volume was not a low volume. It was a pretty okay volume, you know, the medium volume. So based on that, we believe that there is a short coming on the USD index, on the US dollar. So if this showed us the weakness in the US dollar, that would mean that any pair that the US dollar is paired with, we can take the opposite direction. Like for example, at the beginning of the week, the AUD USD was pretty much down, but now we see it is the most bullish trending currency pair right now. After that, we have the GBP USD too. What happened here is, once we saw this, and then we have the next candle confirm it. If you observe it, this candle broke below the previous daily candle, and it had a pretty greater than average volume. So this level would be an average volume, but the level of volume we are seeing on this and the doji is pretty high. So we had reasons to believe that, you know, a lot of selling orders were coming in. So based on this, we took our positions on GU a couple of days back, and we have been profitable in that. Then this yesterday's candle, you know, this was a retest. So if we just check it out, we'll just mark it and check it out here on the lower time frames. We see that this was a retest of a particular zone, and it failed the retest. And just today, just before the London, just about the New York Open, the 4-hour candle had closed in the London session. And we see here a pretty high volume. So this line indicates an average volume, but this was a very high volume and it rejected a resistance zone. So by all means, we saw a fall in the dollar index coming, a shorting of the dollar index. So based on this, I just want to show the viewers the positions that we took.
Go ahead.
Can I just go ahead? Okay. Can you tell me if you see my Telegram screen, or do you still see the...
I still see your account, your AvaTrade dollar index
Okay.
account.
All right.
Yeah, I think you need to go share, and you have to share specifically Telegram because it's a different software.
Okay.
Yeah.
Okay, do you see this now? GBP USD?
Yeah, I see it. I see
Okay,
it.
so this was right at, the New York Open. We saw the weakness in the USD, and we immediately knew that this was going to be a long position on the USD. We entered over here, and you just saw what happened. It just took off. And the same thing happened also with, the gold. Let's just see that. Jose, can you tell me what screen you're looking at now?
Telegram. We have Telegram now.
Okay. Okay, what about now?
Same Telegram. Still the same.
Okay, just a moment. All right, what about now?
Dollar index, Hawkeye.
Okay, yes, this is just to show us from the Hawkeye too. The Hawkeye had previously given us the indication that we can go short on this. We have the signal right here, the roadkill signal, and we saw the volumes increasing. There were engulfing candles, and today it was all rejection. Rejection of a resistance level from under. So by all means, we could see this coming. And right at New York Open, what I saw here is, I was just having a look at the GBP USD, and I was looking at the fat man. So if you see here, the fat man actually shows us that GBP, which is the orange line, was crossing up, and the USD, which is the blue line, was crossing down. And we already had a buy signal issued long back. So that gave us an added confirmation. But the time frame that I entered in on was actually the 5 minutes. So on the 5 minutes, I saw over here, the GBP is pretty much oversold, as we see in this movement. And now it was going to resume the trend and go up. So I believe our entry was somewhere around here with a stop loss of about 31 pips. And we are 1:1 ratio as of now. So we have to see for the rest of the day how it goes. So that was my analysis about why we decided to short anything opposite to the US dollar. So also gold, we can just have a look at gold, how gold has been doing. We again had a signal to go long on the gold right over here. One of the confirmations would be great volumes. If you observe all this area had a pretty low volume. Let me just draw that. I think annotation is a better way to explain. So this is very low volume, and suddenly you see the green colored volumes. If you see, there's a massive difference between both. And corresponding to this first green volume, we see this bar over here, a bullish engulfing bar. And the very next candle, we see this, the roadkill signal for going long. So let us just see if we saw the signal. Okay, imagine that we entered over here and we had a stop loss about right under that bar, about 120 pips. So at the moment, we would be at least 1:2. 1:2 risk reward is pretty good. And it's a clean, if you see, it's a 2 big candle pushes and it gets the job done.
Absolutely. And one thing I want to add to the audience, Mahesh is counting as most of the time we trade in Europe and we use CFDs, which is a synthetic, like the underlying asset is gold, but we're trading a much different contract. And if you were trading gold futures, that would be 12 points. And how much you had to the upside, Mahesh, from the stop loss?
From the stop loss, it was about 220 pips.
Yeah, but what was the upside potential on the trade? If you can.
Okay.
Yeah.
You mean the target we are looking at?
Yeah, the target we're looking at, what's the total equivalent in pips, points, and everything?
Okay, we will be looking definitely at a retest of the 1700. So let's see how it goes. I think from this point on up to 1700, it should be something about 360 pips with a risk
360.
of 120 pips.
120. So what we
Almost
look,
1:3.
So absolutely. At least my hedge is looking in that case, it's a 2-to-1 risk. If you're trading futures contracts and you're buying gold, you still have a 2-to-1 risk. Your mathematics, the economics of the futures contracts are way different, but you still will be taking home, risking your capital, a 2-to-1 risk reward. For a trade, that's fantastic.
Yes. Also, maybe you can talk about the Euro AUD short that you took.
Yeah, let me just,
Should I stop the sharing?
Yeah, so we can look at the positions we had from, let me share with everyone. Where's that trading account? Oh, Jesus. Yeah, let's take a look at the positions we had before. Okay, here we go again. Let me know when you see my screen.
Okay, I see it now.
Okay, perfect. So a couple trades that we discussed during our European session. We had short US dollar versus, just bring my pencil. We had short US dollar versus Turkish lira. As of now, our return on this, it's $3,000. We were risking, I'm risking at $3,300. And like we said, this is a risk capital account, risk capital. This is for clients that are trading. It can be swing, it can be intraday, or they want to diversify from their current retirement portfolios. That's what we're looking. That's what they wanted us to do. We're working on it. So we take $10,000. We are not going to play with the traditional risk management that you get on books. That's not what we do. Okay? That's not our focus. Now, right now, we're risking, we were willing to take a risk of $3,000. We're $3,000. We are accomplishing our mission. Mahesh came with his analysis, bring an analysis in the euro versus the pound. As of now, it's not producing any returns. We'll see how it goes. Mathematically speaking, what we do is with these trades on daily basis, swing trades is either we get out by stop loss or we close all of them at the closing bell of the New York session, which is for me in Croatia, 10 p.m. European Central Time, I think, estimated. Now, based on the data that we get today from the US, we take 2 more trades. Well, that can be trade number 2. Just remove this. Trade number 3 and 4. Trade number 3 is a continuation in the appreciation of the Mexican peso. One idea that I share with my hedge is, okay, I'm just playing the dollar versus the Turkish lira mainly because I know that other emerging market currencies like the Mexican peso, MXN, and the South Africa rand, as of now, they're probably plus 5% in a week. And that's great because they're being devaluated by the US dollar a lot. So we talk about that, Mahesh, and it made perfect sense. That was my fundamental. It's not about who is better, technical or fundamentals. Forget about it. It's take the best of both worlds and use it to make money. That's all it is.
Yes,
that's all we want.
Yeah.
All right. So trade number 3, continuation. So I sold the US dollar versus Mexican peso. You can see it's in profit. And the markets are being flooded with money, free money. Like in your face, Mahesh, money all over the world.
Yes, yes.
Free money, guys. So we decided to take a bet on, Mahesh was already scalping the Great British Pound, GU, Great British Pound against the US dollar. I decided to take a risk on going long pound Jaen, if that's the case. So I'm expecting at least for the day 100 pips more. You think it's not possible? I think it's probable. 2 different words, possibility and probabilities. One is thinking is based on words, ideas. Probability is based on the math, understanding how the markets are functioning as we speak on free money. That's our VP of communications. Mr. Dan Klein. Let me see. He's on. Let me see. He's probably yell at me because we published the video without any audio. Today is a day of joy, and Mahesh told me, and we gotta do it, guys. We gotta thank the Lord for the great opportunities we had this week and today, for ourselves, and moreover for our clients. Let me see if I can connect with him. See with clients. 1 second, guys. Probably you don't see my screen. Let me see again. Let me just connect the screen. What screen I had? No. 1 second, guys. I gotta do this real quick. Connect with the boss. Wait, let's see. You call that?
Gold is still moving up.
Yeah. Yeah, they're trying to talk to me about a product. Yeah. Let's go back to markets, guys. Wait. This is just funny. What is the platform? You can't stop laughing. Oh my God, these markets are crazy.
So what are you trying to look at?
Yeah, I'm just gonna bring back the platform where we have the trades. Wait a second, I'm just gonna.
Okay. You mean the stocks or the FX?
No, the FX Pro, the FX trades that we have so far. Okay, do you see my screen again?
Yeah.
Yeah, so I mean, guys, this is going to happen a lot. Like, we're in the middle and we're getting so much information back and forth from the company. That was Dan Klein, our VIP of communication on Market Traders Daily. There's a lot happening at the company, new products. There's so much happening in the pipeline. Clients making money back and forth. Mahesh, I don't know if I told you that in Japan during March, they opened 500,000 trading accounts.
Wow.
That's five. Let me just write it on the screen. 5,000,000. 500,000 new trading and investing accounts.
Smart. Yep.
Smart. Yeah. That's what I'm saying. Everyone is like, work from home is a thing. Like, work from home will stay. We know that. You're working from home. You're a successful data scientist. And we have... that's where bosses are just in the middle of the whole thing. So there's a lot happening. You cannot wait. That I think there's risk to the downside? Of course. There's always risk. Hey, listen, if you cross the street, there's a traffic light. And even if it's green, something can happen. Something can happen. And someone can just hit you. Someone is drunk, God forbid. There's still risk. Not because there's a green light doesn't mean that everything will work. I mean, Mahesh and myself, we know that we do all the research. We look at all the state-of-the-art indicators, Hoka traders, tactics that we know, trend Fibonacci, price rotation. We have all this, and still there's room where you can fail. But that doesn't mean that you have to stop and feel sorry for yourself. You just have to continue. Yes, I mean, it took a while for Mahesh. There's money that has been invested. There is time, the money we can get, but the time, there's no solution for that. It's gone. So if you have invested time, this is your best opportunity. And I understand you may laugh at us because we're sharing with you some simulations, but our success is to build, to design trading models and all different products for clients to decide how they want to, because remember, we're not managing your money. If we were managing your money, it's a different story. But what we're doing now as both analysts is digesting, working the hours, because you cannot fake work in the financial industry. You have to put the hours. Ah, another client, you see, is on fire. Hi. And you see, we cannot fake clients communicating with us all the time. Just make sure that message got out. Let me just remove my pencil. Mahesh, do you have anything else you want to add there? Because I mean, we went over the trades. We have the trades out. I think the trend will continue during the session. I don't see this going anywhere. Like a lot of people are gonna get. If you try to short the indexes, you're gonna get stabbed. I guarantee you that you will get stabbed. There's a little bit of profit taking on the entries. You see? Do you see that, Mahesh?
Yes, I do see that.
200.
Yes.
We have a client. Let me show you right there.
Okay, on the Zoom screen, I don't see anything. I see the charts.
Okay, just we have clients.
Okay.
Okay. So that's what it is.
Yeah.
1 second, guys. I'm communicating with clients. I have to do this. Let me share my screen, my Telegram. This is happening. This is fast. The fast world of financials, financial markets. Let me put out the. Everyone. Where is we start harvesting. It's harvest season.
Amen.
Amen.
Amazing what he just said.
Tiger Tony. Can't stop laughing. Ah, this is just crazy. Crazy. Okay. Yeah, and we're recording. Everything is happening. This is like this is Mahesh and myself day-to-day activities. Like, wait. What's the RFOL?
ROFL.
RFOL.
No, ROFL.
Okay.
That means rolling on the floor and laughing.
Oh my God.
Oh,
actually,
man.
you know that I think let me share my screen. I think this is the last thing because we gotta take care of clients, guys. I mean, this is just out of control. Let's take a look at Microsoft. It's just a big name, but it's a company I want to take a look at. And there's one more name that will be part of this video. First, just a traditional name. You know, I don't know what is this whole thing here. I don't know why I put it there. I'm just remove all drawing. And we're gonna move to bigger time frame. So one of the things that I always talk to during the war room is I look at the monthly chart. That's what I want. I don't really have time for small peanuts. I'm here to make money for our clients. The big money is made out of the monthly. That's all you need to know. You have nothing to do in the war hour. When we trade currencies, we do different, we apply different tactics. Like Mahesh, he likes to go into 5, 15. That's fine, because if you're looking to a long-term trend, we sort of want to see the entry in the lower time frame, the beginning of it. We not easy, but we tend to look for bottoms and highs. And we set up ourselves to success using different strategies that we won't share because simply they're for clients. But what we can share, because we want you guys to take action, to commit to your education process, to your growth, is to understand that how we do this step by step. So when it comes to stock picking, we do differently. We look into the monthly. I look into the monthly, I see what has been, and right here in front of you, before talking about any indicator, volume profile, Hawkeye Trader tools, in front of you, you see a beautiful bullish trend. You don't need a PhD to see this. It's in your face, in your face. What else you need to know to this is a bullish trend? Now, after that, I'm gonna take a side. I'm not gonna talk about the Hawkeye Trader indicators. Mahesh will do that at a different session, talking about how to apply Hawkeye Traders. Same process when you look at stocks. What I will talk about is volume profile. Now, I'm have this set up for a lot shorter time frame. I'm gonna just switch it, and I think it was gonna 100. Let's see if it works. And from the monthly, I'm gonna go to a lower time frame. I mean, if you can say weekly is a lower time frame. And this is what I want you to see. Look at all the volume. See if I can adjust the volume. And 60. Okay, now, do you see that, Mahesh?
Yes.
Perfect. Now, if Mahesh can see it, I bet you guys, the audience from Market Traders Daily, you guys can see what we're looking at. We're looking at a strong support combined at the point of control, POC. This is the red line. Think about it as the gravity, as the core value for the stock. Right now, $100 for Microsoft. And then, look at it. There's another key point at $136. This is, in fact, executed volume. This is why volume profile is so relevant for you guys. It's in your face. And I repeat this all the time, this idea all the time, in your face. You see it, I see it. Who else you think it's looking at it? Professionals, Main Street, other traders. We're not hiding information from you guys. If you didn't buy Microsoft at this level, which we did, of course, our clients did, hey, you were scared. Fear controlled you. And we understand. We understand fear. We don't follow it, but we understand fear. What was the danger? Let's talk about a real number. What was the danger buying at this level 2 weeks ago? 1, 2, 3, 2 weeks ago. There you go. 20%. Yes. That's it. For a quality stock like Microsoft, buying it with an implied risk of 20%, that's peanuts. Peanuts, my friends. Peanuts. Cents on the dollar. Cents on the dollar. And if I look at the historical level, going all the way back, we're talking about levels, resistance levels up to 2018. A little bit more risk, probably going to $90. I look at that, $90 all the way, 33%. 33%. You're risking 30 cents for every dollar. That's nothing. Absolutely nothing. Keep in mind, the S&P 500 was down 13% at close, March. You were risking to get at this level. You didn't know at that time, I understand, but you were risking knowing, applying volume profile, you were only risking 20% of your money. Pay-per-view. Pay-per-view. And look at what it is now. 20% risk. I use price range again. 23%. That's it. Now, just to give you an idea, quality stock, I'm not going to take much of the time so you guys can watch this video during the session. We're very active, okay? And we need to go back, we need to go back to clients. But I'm just going to share with you simple approach. See, this is trend Fibonacci. Look at it. So we go back to the origin. The other way around. My bad, Mahesh, my bad. Like this. This is the top that we know. So far, that high was $180 per share. And we go to the explosion of the move of this bullish pattern. It was all the way back to December 24, 2018. Not surprised, Mahesh. What is that level? 61.8%.
Yes, that's right.
Not a coincidence. Now,
Yes.
what is my next start? My first target will be to take some money off the table at $180. And if all the stars align, and apparently the fundamentals looks very strong for a company like Microsoft with Microsoft Teams, their cloud services, we're talking about $95. And then I do that projection from the 61.8% Fibonacci, looking on the weekly chart, have $90. I'm going to go down a little bit, just around 98, a little bit more. I'm looking at a $230 stock. That means two things. Number one, the offer, I'm going to just leave this for a second and probably just do another video later today to talk about different stock. Listen, there's a structure. I'm going to just share with you that structure real quick. It's market cycles, offer, demand on the weekly chart. I see it. I will share with you. Based on trend Fibonacci, if we take the low from December 2018, look at this, December 2018, all the way to the known high, $180, we have a powerful retracement. In conjunction with volume profile, get your monthly service from TradingView. Invest in your future and a better future for your family. Do yourself a favor. You have that, and the projection is a total of $95 in about 2 years. 2018, well, that's actually a year and 6 months, or less than 6 months, 1 year and 5 months. It's $95. Things can play based on the amount of free money the Federal Reserve, the Senate, the White House, and all the central banks are pouring into financial markets. Everything will go very crazy. There's risks to the downside, but don't bet on a holocaust. I know it's a strong word, but that's what people think is going to happen. I know right now things are difficult. It is difficult, but there's light at the end of the tunnel. The human race is a survival. We have been surviving for the last 100,000 years. For more than 100,000 years, the human race has been surviving. Coronavirus is not going to be the last virus to try to kill us. I bet you that.
Yes, that's right.
So faith, and keep working. So this is our first target. Real quick, and we're going to close. Mahesh has to go. I have to go. I'm not going to go into details, but this is what happened. There's a cycle. This is called the offer. This is where institutions decided for whatever XYZ reason to abandon the stock, profit taking. See, now we have created what's called the demand. The demand has been created at $130. There's always the opportunity for the demand to be retested. Prices can come back down. That should not surprise us. But what happens is the most important interaction between offer and demand is the market cycle. In order to be completed, that cycle has to be closed. How that happens? It can do it has to do this 1.1, 0.2. It doesn't matter how many touches you have, how many offers you have at this level, or how many demands you have. At the end of the day, this is really what happens. And these, my friends, audience, beautiful audience of MicroTraders Daily, committed individuals, women and men, it's called market cycle. Institutions will go and close the cycle. That's why I know Microsoft, it's at least worth in the short and medium term, $190. When that is done, said and done, then we will move to new highs. Mahesh, final words? Mahesh.
Yes, I'm here.
I'm sorry. Go ahead. Final words, man. Sorry. Anything you want to add, share with the audience before we go? Because we got to go back to work.
Yeah. Well, nothing much. I think we covered everything. So
okay.
Nothing from my side.
Yeah, perfect. No, thank you. You've been doing a great job. I love how you have been empowered. We have to thank the Lord, how you're being empowered with the use of state-of-the-art technology coming from Hawkeye Traders.
Yeah.
I think what I told Randy Lindsay all the time, we're big fans of his work.
Absolutely.
Yeah, I did. Hey, guys, not much to say. I thank you. We're going to now just probably have a very short video when it comes to the closing of the New York session. We'll talk about what happened at the end with the closing in Europe, and we'll see how our trades do. If they close by take profit, or we close it manually, or they were hit stop loss. Thank you so much. On behalf of Mahesh Taank, data science from India, myself, José Ricaurte Jaén, head analyst for multi-assets at MarketTraders Daily, and the War Room. See you later.
Bye-bye.
Bye-bye, guys.